Episode 141 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risk and seize opportunities. Learn more at futuresfundamentals.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudelli sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudelli.
Hello, everyone, and welcome to the newest episode of Futures Radio Show, where we will highlight our favorite moments of the show over the past month. But before we get started, I want to thank all of our sponsors, CME Group, Trading Technologies, and Top Step Trader. So without further ado, let's dial into those top moments of the show this month. And I've had a lot of bears on this show this year, a few bulls, but you're someone who believes that right now we're in the fourth or even fifth year of a secular bull market. So let's start off today by you talking to us about why you believe that and what you see happening over the course of the rest of this year.
Sure. Let me give you real quickly the longer term. The reason I say we're in the fourth or fifth year, or, I'd say fourth inning if you want to use the sports analogy, is because I think the period of time between March of 2009 and, say, late 2012 or early 2013 was sort of a recovery to what I feel, in a way, was an overreaction in the market, not to the credit crunch, but to the market. So I think that we're really in the I'd say sort of some of the middle stages of a secular bull market. Bull markets last 12 to 16 years or so, and I think we're in that process. However, there's going to be a lot of opportunity to the dark side. And the only thing I would say, anybody who tries to short a dull market, shorting dullness just doesn't seem to work for me. I think you need to short volatility. We haven't seen much of it. I'm expecting at some point here we're going to get a drawdown this year. I think we've seen probably the best part of the returns for this year, but there should be another 2 or 3% of left. I mean, if there's some global political event that's shocking, of course we'll get a downdraft. And I think that if all the measures fail, healthcare, and they make no progress on taxes, and it continues to be a mess, eventually people are going to get disgusted. But granted, it's earnings that really makes the market, and what I've seen from earnings so far look pretty darn good.
Before we get into technicals in any market, I want to talk about process. I mean, you and I are both big advocates of process. We've had you on the show before. You and I have had conversations before about process and its importance. It's what you're doing before you go and execute a trade. So talk to our audience and talk about what type of chart you're using, what kind of time frame are you trading in, and then what technical indicators you're using.
All right. Well, I do believe process is important because that's the only thing that allows us to replicate things over time. It's like a baseball player that has a few pitches. He's not going to change how he winds up every single time because he's not going to get consistency. And so that really is the main reason for why we like to focus on process, of course. And so for me, I always start big picture because I'm looking for the spaces where the big moves occur. And every single morning, I will start looking at the weekly chart, even though I'm an intraday trader, and people think that that's very odd, but it is certainly what I do. I start from the weekly events, and I say, am I chattering around a level of support or resistance that a lot of price action seems to be moving to, And if the answer is yes, then intraday, as I move more closely into the tighter time frames, I'll jump to that 4-hour chart and I'll say, all right, are the traders sitting in a way that will allow them to punch through? So, for instance, in the ES today, before the open, before this big move started early in the day, I looked at the weekly chart and I said, well, you know what? We are sitting up around that congestion zone near 24.28, 24.29, And that was support on the weekly chart for a long time. So if I see us creeping up over there, the tighter time frames are going to tell me if I have momentum that it's going to be able to press forward. And indeed, all of that was ramping up. And then the news came, and then, of course, it moved naturally in the flow of motion that momentum was already building towards. And so I always start in the big space because I think although I'm an intraday trader, if I look at the little spaces, the 5 minute, the 1 minute, those sorts of things, the noise distracts me. And I'm always looking for where is the real signal event? Where's the pivot that slips buying into power or selling into power? And it really starts looking at the week.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. You said to me in a different conversation that the bread and butter of what you do is helping identify risk for a producer, and then what is appropriate tool to use in order for them to manage it. So explain to us that.
Correct. So, I'll kind of give a little bit of idea of exactly what it is I do. Essentially, I'm a broker, a risk manager, an analyst, a technician, etc. Our goal is to help guys identify risks on the underlying commodity that they actually produce. So we are working with the true hedger. We're working with the guy who raises cattle in Texas. We're working with the guy who raises wheat in Montana. We're working with the guy who grows cotton down in Alabama. So what we're looking for, in the markets is it's not terribly complex when it comes to exactly what we have to do. What gets complex is when do you execute and how do you execute. So when we have, a producer kind of just to bring everything up to speed, hey, what are you producing? Where are your break-evens at? Where can I protect today? And if I can't, what are we going to do moving forward? A lot of what we do at TopThird Ag Marketing is with options. We utilize options to help guys take advantage of opportunities. Being that, you can buy a floor under a price or at a price to protect the actual physical commodity. Our goal is to try to put that floor in place, and which sounds very odd from a normal trader. We would love to see that put go worthless. The reason being is that the producer has the other side of the trade. And when I talk to a lot of old timers, I talk to a lot of, traders, a number of them say, man, if I had the other side of the trade, I'd be an awesome trader, right? Because you have both sides of the trade. So that's why we deal a lot in options, because it helps a guy manage emotion. It helps a guy, stay viable, stay sustainable, stay profitable, which is the top goal, to stay profitable and help them make, sound financial marketing decisions when it comes to marketing their product. So that's, essentially that is the bread and butter. Is my job to help guys identify risk, give recommendations on how to manage that risk, and then moving forward, helping manage that position as a market moves, helping manage the physical side as the market moves, and then staying in communication with the producer, because things change. And when things change, something might have to change on our end. So the bread and butter is to help a guy understand where their risk is at or where it will potentially be. And we've kind of set our own guidelines based on, what we've seen. We've got a lot of trading experience in this office. There's a lot of good minds, a lot of guys that have been involved in the ag trade here in our office. So it's really exciting to kind of bring that all together and then help apply that to an actual producer's operation and therefore business.
I want to talk about disruptive technologies. Now, you're just the kind of person I like to talk to about this because you have a great understanding of the energy markets. And I travel across the country, Europe. I go to all sorts of shows on fintech, and I go to shows on for financial markets. And the one thing I do when I go to all of these shows is I always look to see what is going to be this disruptive technology. I'll never forget the first time I sat into, I was at an FIA conference, and I started hearing about blockchain and just what they were saying, how it's going to impact financial markets. We're seeing that happen now, and this was years ago. And as for you, what do you see right now as a disruptive technology that's going to have an impact or potential impact on energy markets?
I think there is an agreement among a lot of people that the disruptive technology basically is the electric car or the EVs, electric vehicles. But really, is it the disruptive technology? I'm going to make a statement and then we move to the discussion. Think about it this way. It takes 140 million cars, 140 million EVs on the road to reduce oil demand by 5 million barrels a day. And we've been working on this for a long time, and it will take us probably another 20 years, 30 years, depending on whose forecast is, to get to that number. So 140 million, amazing technology, a lot of work onto the batteries and investment, billions and billions of this investment, just to reduce demand by 5 million for every 140 million. Guess what? We increased U.S. oil production through the shale revolution by 5 million in 5 years. So which one is disruptive technology?
Like you guys both said, once volatility or price starts to move that much, it piques everyone's interest. We started to see that with Bitcoin. It was obviously the leader in this space, and all of a sudden now other ones started to move, and it's just brought in a lot more people. How do you guys see the next 12 to 24 months panning out in this space? Nick, we'll begin with you.
I think it just grows, and as prices go up, more and more money will follow it in. And especially, Coinbase added 1 million accounts in June, 1 million accounts in 1 month. Now, clearly, with this bit of the sell-off, some of them will be wiped out. But as price goes up again, that's all anybody wants to ask about. I'm overwhelmed with people who want to know about technical analysis for cryptocurrencies. So I just only see it going up for now.
Brad, what do you see?
I think tons of coins, more and more coins. And it seems in the beginning, I thought, well, Bitcoin has to either win or somebody else wins. But from the reading I've done, it's not like that. It's kind of like saying that you have text message, so you're never going to use email. So you'll never use Facebook Instant Messenger, but then we all use all those things. So there might be one of them that's really good with public record keeping in large transactions, and that might be good for real estate and cars. And another one that you can press a button and send 2 cents to everybody in Africa, so it's good for that. And another one that's good for, keeping public records at a motor vehicle station. So I think that you're just going to get more and more coins that serve a specific purpose, and then some of them are going to turn into the major adoption vehicles. And we kind of see that with a few, but I think in the future, it's yet to be determined for a lot of stuff. So it's like the second wave. I think 12 to 24 months, you're just going to have more. I can't predict which one's going to win, but I think more and more activity, and the more you research it and watch the charts, you'll start to see what the market thinks. And I think that's where the opportunity is. We don't know, but the market will tell us. So we kind of follow the price action, and then you research it once you see that happening. That's been my approach.
That is a much better way of approaching markets right now. I think in when we have lower volatility, you talked about vol being cheap. I like it so much more, and I've been trying to do this more and more in my trading, to where I could take my ideas and be able to hold through and have time, actually be on my side. Because I've said this to you in a different conversation, a lot of the ideas I've been having this year have been right, but it's like all of a sudden they work out and maybe you're not in it, and it's like, because I've always been such a short-term trader that, lately I feel like the way that you're trading is a much more efficient way to be able to, tackle these markets. And I think a lot of futures traders like myself have really realized that when you're in a low volatility environment, you have to expand your time horizon a little bit. It's good to hear from you and see how you're approaching the market. When something gets out of what you would consider out of whack, we'll call it, with the euro, or, and regardless, even if you're wrong in the euro, that it still may help your other position. Because if the euro continues to go higher, let's say at a rapid pace, then that probably would help your Baiynd position.
Yeah, you're like, for example, today the euro's up a little bit, but the Baiynd T-note spread kind of blew out. So actually, I think I'm up a little bit in terms of today's trade, even though I'm offside of my euro. I've made up for it on the other side.
Exactly my point. So it's like when that opportunity comes, you're able to step into that euro with, I think, for me, it would be, it's just like one of those no-brainer trades where you're like, okay, look, this has hit some levels. This is an area where I think I could step in and I could either really add to the strength of my position, but even if it goes against me, it's not going to blow out my other position, and the work I've done is not totally gone.
That's correct. And the other thing to think about is, in terms of, you're just a straight euro trader, you should be aware of the relationship so that you're watching it, because you might see the one, the Baiynd spread, versus T-notes blowing out one way or another, and you go, hey, you know what, this is going to eventually mean something for the euro. I should keep my eye on it. So it's good for everybody kind of to know, in terms of, or all the euro traders to know and to be aware of these kind of relationships, so that they can just keep their eye on it as well. It gives some important clues at times.
I've always said, if you're just watching your market, you're missing everything, because other things that are happening in other markets are definitely going to come and impact your market. Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.